All right, good morning, everybody. As usual, start with Market Watch. Take it to the calendar, look at the things that are on the books for the day. You can see we have a full list of things to deal with. Some of these are going to happen before the market even opens today, and that can set the tone, it can set the mood for the rest of the day. We're going to be looking for a change in market sentiment. Everything, as you're going to notice, is going to be very bullish this morning. Everybody's got that exuberance going, good times, happy times, lots of bullish activity. All of that can change between 8:55 and 9 a.m. with that economic news coming out this morning. Always want to continue to look back and ask, am I still right? Because we can start out being right, taking trades, and as the morning progresses, everything can just completely turn around. 10 a.m., 11, 1 o'clock. So we're going to have some additional auctions today. When this happens, it can kill a lunch. Lunch is typically where we expect a market to pause, consolidate. And yet on a day with an additional auction, this is what throws so many people off when it comes to lunch. Seeing a market that is supposed to stop at lunch suddenly take off. So looking at the ES, we did make it through and now have the cup. We don't have a handle yet. A lot of times the handle will form early before we even get back to the top. A handle will often form down here. No handle at all. There are some times where a cup is actually a ladle, and that's when we see it a little higher up. And then we see the handle. Often looks like a Busby as well. So we are going to be looking for a little bit of a pullback. Not yet, however, right? When you come back and look at the previous patterns, the same setup. Here's an area for an example where we came back out of a range and just had an amazing 2 weeks. So got to play every day looking at what we have, not what we think. What we have right now is a nice, healthy, strong market. We're up near 0.5% this morning. Now, as I talk about frequently when it comes to looking at the percentages on the day, knowing what the ADR is, the average daily range, goes a long ways. The average daily range in the ES right now is 1.29%. It's around a $60 move. Well, we've moved 20. We could move another 40 on top of that, and it would still be considered normal, average. It wouldn't even be reaching above and beyond the norm, right? For a continued move to the upside, we're going to need to reclaim the Globex high, hit that 0.5%, and then we do have the expected move top, 45.94. Should have kept that. Should we manage to get past that, a 1% move is not out of line because we can see from the ADR. So between a 1 and a 1.5% move, we've already been open, for over 12 hours, and we've managed to get near 0.5%. We could just as easily make that next 0.5% or more. Same thing to the downside. Should the market not like the economic news that's coming out, previous week close will be my first target. We would resolve the Globex low previous day's high, floor pivot, and then we would deal with this bright pink line. That would be the old all-time high, 0.5% move to the downside, and then the previous week's close, basically where we closed Friday. So a lot of pivot points to hit on the way down. It wouldn't be a surprise. We would first break that 50, and then we would break the 200. So when we zoom out a little bit, looking and talking about that 200, it's the purple line on my chart. You can see it's an event when it finally happens, when we get underneath it, right? And when we interact with it and try to get back above it. It will be very obvious using a 50 and a 200 on any time frame is a great way to recognize when there's been a change in market sentiment. When you cross the 50, cross the 200, you've got a change in fundamental change in market structure. Any time frame will work. It won't matter. Even a tick chart. I was looking at the 1 hour volume profile earlier this morning, and it really showed us in an overextended state. Yet the 30-minute volume profile showed us right at the top of the range. Now we use the 1 hour more for a swing trade, and we use the 30-minute more for our shorter duration analysis. Still, both of them showed that we were near a reversal. When we measure how far a market is away from its 10-period daily moving average, we're not out of line. Now, every market has its own unique distance that it reacts to when we're asking that question, how far away from the 10 is the current market environment? Notice when the ES gets more than, say, 2.5, close to 3, away from its 10-week moving average, it tends to reverse and pull back to come back to the 10 like a magnet. Now, this is set to a week, but we can go in and answer the same question with days on a 10-period moving average on a daily. You can see the same thing when we get around a 2. Price doesn't want to get more than a 2 away from the 10-period moving average before it starts to pull back, turn around, and come back at it. We're talking 2%. So we're getting very close to that reversal spot. If the ES continues to make an exaggerated move away from the 10 without giving the 10 time to catch up, we're very likely to see a reversal. It's like a little bit of gravity. For the NASDAQ, we are at the expected move top. Imagine that, right? We're already there. So the expected move would be this indicator here. These lines are drawn on Friday, and when the market closes Friday afternoon, they are locked into place. They don't move. They are a static expected move. If you wanted a dynamic expected move, you would come in here and look at the current expected move of the market. 1 day, 3 day, 6 days, whatever it is that you're looking for, it's right there. That's a more immediate expected move. There is a very good reason that we use this, however, and we're already there. Now you can see that we got there last week on Tuesday, and that's really as far as we got. Sure, we peeked through it a little bit, but we really couldn't hold it. We're going to keep our eye on that line today. It's the line in the sand. In the SPX, doing a weekly expected move analysis is more valid than anything else that you could measure. So it's okay, we're looking at it on the NASDAQ, but if we wanted to get some real analysis in the market, we would look at the SPX and the weekly expected move. Still, we're tangled with it right now. We're interacting with it. We would look to get back above that level, break Globex high, and start dealing with percentages to the upside. We are already above 0.5%. We have an ADR of 1.5. which means we could travel all the way up here and it would not be considered unusual at all. It would be in line with what's normal, because the NASDAQ in the last 21 days has made large enough ranges on a day-to-day basis to have an average range of over 1.5%. That's a 1.5% move today. Now, nothing says it has to be a bullish 1.5%. Should we complete this head and shoulders and start moving to the downside, we're already underneath that 50. We'll test the 200, look for a break there, break of yesterday's highest point, Globex low, yesterday's close, floor pivot. We'll deal with this structure back here. We could even highlight this little bit of pivot here. 0.5%, 1% move to the downside, and then the previous week's close. Beyond the previous week's close would get us to yesterday's low, and then our 1.5% move to the downside. So again, that's not considered an unusual move in the market. Although, if we were to make a 1.5% move from this current location, it would really be a 2% move to the downside, right? Because we would give back the 0.5% we've already made, and then we would travel another 1.5 to the downside. That'd be a 2% move on the day. That would be considered a little bit extreme. It would not be subtle. It would not be sneaky. You would see it everywhere, right? Stocks and bonds would be lit up. The sectors would be crumbling. Or there would be fire across the skies. It would be very obvious. A slow grind to the upside, however, is not going to be so obvious. It's likely to be choppy, disjointed, lots of fits and starts. We are outside the range, however, so the possibility for a trend day is on the table. And I know it's hard to trust a trend day, especially after so many days where we've been just kind of getting beat up. But see, these kind of trend days here, they're not trend days. They're just trend. And it's very clear why it's not a trend day. It's inside yesterday's range. You can't call something a trend if you're inside of yesterday's range. Trend has higher highs and higher lows. This thing didn't have higher highs and higher lows. It was inside of yesterday's price action. Tradable? Oh yeah, totally tradable. Trend day? No. When you remove the doubt and ambiguity and confusion of what a trend day is, then you can maximize their effectiveness. That was a beautiful day. Great price action, not a trend day. For this morning, we are outside already. We're outside of yesterday's range. That's one of the first key characteristics or warning or heads up that today could be a trend day. We're already outside of yesterday's price. There are warning signs, however, one of them being that we're already underneath the 50. And that's a little bit concerning if we were going to be looking for a strong bullish trend day. What we want to be watching for at the open is a gap close fake out, right? So what's a gap close fake out? When price is gapped up in the overnight hours, it attempts to close the gap at the open. So we're all bullish. We're seeing red candles and we think, oh yeah, it's just trying to close the gap. And so we're trying to go long while the market is going down, right? We're trying to trade the V bottoms. We're trying to catch the reversal, trying to catch the falling knife. And it just keeps falling and it just keeps falling. And every pause and every pivot is just a pullback before falling lower, right? It's a complete fake out. That it wasn't trying to close the gap before it went bullish. It just kept trying to close the gap and stayed bearish and kept on falling. We've seen that play more than once. It catches new traders unaware because we're so bullish in the pre-market. We're already up 0.5% or more. We're seeing all the sectors, which you'll notice here in a minute. The sectors are up. A lot of names in the S&P and the NASDAQ are up. Everybody's feeling the fire. It's great. It's awesome. We start that downward move. Seems like we're just closing the gap, right? And yet everything just turns really bearish. And we're not just closing the gap. We're continuing that downward move. So don't get caught unawares. One of the ways that you can trade that, by the way, is just trade the gap close. You'll be going in the right direction the whole way. Things that moves the market. So I had A number of people asked me yesterday if yesterday's moves were something that we could anticipate. It was so bullish, they said. Where did this come from? I never seen it coming. And when I asked them, do you watch the dollar? Do you watch the bond? No, I don't. I probably should, huh? Yes, you probably should, huh? If you're going to be a futures trader, hell, if you're just going to trade in the intraday and you want to kind of have an idea of what's going on in your marketplace, probably want to look at the marketplace. If you stare at one thing, oh, I'm going to go trade Facebook, and you stare at Facebook and you don't look at anything else, you might as well take the palm of your hand and put it flat on your nose and then ask yourself what you can see. You can't see anything. Price is the best indicator that you can have, and the more prices you look at, the better understanding of your marketplace. Stocks, bonds, dollar, VIX. We use the ES, the NASDAQ, the Dow, and the Russell. When we say stocks, that's stocks, bonds, dollar, VIX. And I get it, though, when we don't have very many screens. Screen space is precious real estate. I get it. Find an old phone, find an old tablet, put a market on there. Just have it sitting off to the side. Ask Siri. She'll tell you where the dollar is or the bonds are. The exaggerated move in the dollar and the bonds is what moved our market yesterday. It's what typically moves our market on a day-to-day basis. We're always juggling back and forth between stocks, bonds, VIX, dollar. Stocks, bonds, VIX, dollar. Use these tools to your advantage. They are one of the best indicators that you can put on your screen. What's going on in stocks? What's going on in bonds? When the bonds start making exaggerated moves, what's happening in our market? What does it mean when the bonds go up? How does that impact our market? Right? When bonds go up, interest rates go down. When bonds go down, interest rates go up. We know that banks like high interest rates because banks loan money to people and they want to be able to charge them a lot of money for it. They want interest. The higher the interest, the better. Right? Technology does not like it when interest rates go up because technology loves to borrow money to buy their own stock back. They do it on an unprecedented scale, and every year it just gets bigger and bigger. Tech loves to borrow money. They don't even need to borrow the money. They just would rather borrow money and do it that way than spend the money they already have. They don't want to borrow money at a high rate. They want to borrow money when borrowing money is cheap. That is what often puts us in a conundrum, because on one side, seeing bonds go up and interest rates go down means we're going to see the banks go down. We're going to see technology go up. But if bonds start to fall and interest rates go up, we're going to see the S&P go up and the NASDAQ go down, right? And then there's times where tech says, well, we don't care. They enter the high interest rates in a big deal today. We're just so happy anyways. And you'll see both sides go up. If it's going to be one of those rip your face off rallies today, which is on the table, by the way, we absolutely do have the opportunity to see a rip your face off rally. If we're going to see that, it's going to be stocks and across the board stocks, right? It's going to be tech, finance, energy. It has to be. Now, one of the reasons that I don't think we're going to get one, even though, it's on the table, we possibly could get one, is the market watch. You didn't forget about this, right? We started here. 8:55, 9 a.m., 10, 11, 1. Every one of these has the opportunity to kill a trend day. Every one of them can just completely shut the entire system down. Turn us from being bullish to flat, flat to bullish, flat to bearish, bullish to bearish. It could all go away, and it's almost hourly, right? 9, 10, 11, 1. All day today, we're going to have to worry about, is this trend going to continue? Does it still have the momentum to continue? Is this breakout true? Is this move connected to the economic news? It's just one of those days, right? So we could have a rip your face off rally, but I don't think so. I think that economic news is going to get us. We're on TradingView, S&P 500. I don't want 500 names though, so we're going to use the filter. It's a little bit tricky. I've had someone ask me how I do this. You just keep hitting it. Just keep hitting it until you get something close, right? 103 names is close enough. I just want the top the top 100 names. It is a little bit tricky, you know. Just keep trying. You'll get it. I know it sucks, and it won't save. By the way, you would think, you know, that you could save your settings and then it would just always be there, but no, no. Well, are you kidding? You know, we don't ever get it that easy. All right. So what we're looking at right now is the S&P quote 100 in pre-market. How many names are up at least a quarter of a percent, right? A tenth of a percent. Notice the colors, they're not so much gray this morning. Why? Well, because I changed what we're picking, the heat multiplier. Normally I would pick something like the 0.75, and instead this time I reached down to tenth, right? So 0.1, 0.2, 0.3 to the downside will turn us red. 0.1, 0.2, 0.3 to the upside will turn us green. And anything less than a tenth will be gray. I feel like this gives us a little more context, right? Look how bullish everything is this morning. However, as bullish as this feels, look at the sectors. Now, emerging markets. I talk about emerging markets all the time. This is like your bullish indicator, right? If you could just have a bullish indicator that when every time this thing goes green, you're like, yeah, we're bullish. That would be the EEM. Nobody trades this thing when they're uncertain, when there's fear in the market, when, you know, global recessions, downturns in the marketplace, fear. EEM is the last place people go. And yet exuberance, greed, risk on markets, EEM is one of the first places they'll go. It's a great little indicator to have. I never trade EEM, by the way. I just look at it. It's a great indicator to look at. Jets, emerging markets, energy, finance, and then the other energy is way up here. Now, I always have both of these energies on, but there is a distinction between these two energies. This is oil and gas exploration and production. This is just, quote, the energy sector. That's kind of vague. What part of the energy sector? Obviously not the one that's moving this morning. That's what part. All right, so bonds, finance, healthcare, all slightly green, doing, a little bit of okay. Metals, building materials, consumer staples, all flat to negative, and biotechnology flat to negative. So a whole lot of nothing there, right? This is that capital rotation that's really been screwing people up. We're going to swap the S&P 500 to the NASDAQ 100. We don't need to adjust the market cap here. We just have to change pre-market change percent. Make sure that this is set to the same way the other one is set color-wise. Do you see a lot of green on the screen, huh? Risk on day. Tesla is finally pulling back a little bit. Blowout move yesterday. You know, I love it when economists and technicians say, quote, highly improbable. And then that highly improbable thing happens, and now they have to actually just use the words, oh, yeah, that's probable. I'm a little bit of a nerd. Language matters. Highly improbable is their way of saying it's impossible. But they would never say it's impossible, right? They say, well, that's highly improbable. The move that it made yesterday was highly improbable. But now it's proven that it is possible. So now they have to change their language on when they talk about how far a market can go with a market cap that size. I love it. Love it, love it, love it. You see where the red is, right? Baidu, WDay, Nestes, Autodesk. Monster Energy drinks and Pepsi. Now, of course, I would be looking around asking, you know, where's Coke? Always try to find the peer group, just like yesterday when Tesla was making monsters, right? Look at Li Auto, you know, NIO, Ride, XPEV. got to kind of branch out. Things that are up this morning, at least 1% in the Dow 30. Amazon, AMD, and Twitter. They're all up more than 1%. And then Visa, Goldman Sachs, Microsoft, and Boeing are up at least 0.5%. Even Disney's making moves this morning. It's just not at that 0.5% yet. Had to use the watch list because we don't have an opportunity to set the screeners exactly how we want. For some reason, can't use these screeners on our own watch list. Just stupid. Hope they fix that. All right, so we're looking at the NASDAQ. How many names are up at least 0.25% this morning? 30 names. I'm going to just round up. 30 names are up at least 25%. Well, there's only 100 names. So that's 30% of the NASDAQ that is up at least 25% this morning. That's kind of bullish. It's a little bullish. It's not too bad. But when we're looking at the names, we want to try to find what sector, industry, sub-industry, because that's how we follow it down the rabbit hole. It's how we use the sectors to find our trading opportunities. We don't need to be stock pickers on a day like this where we got to go out and run our scanners and hunt for things. We can just follow the sectors, trade the names that make up those sectors. For the S&P, how many names are up in the S&P? At least 0.25% this morning. 47. So very close to half of the S&P is up at least 25%. That's bullish. So let's use 50s. S&P, how many names are up at least 0.5%? Very close to 25% of the S&P. Again, very bullish. Yay, my catch-up trade may be coming back around. I'm so excited about that. Yeah. And it looks like American Express has completed that Busby. So, if we'd have had more than one call, that would have been a great thing to hold on to. But those American Express calls are freaking expensive. $1,800 a call. So only traded one. All right, let's wrap this up with TrendSpider, since we can more easily identify EVs, crypto, and yeah. So here's the EV markets, right? We don't have an ETF that I like to be able to have our own crypto or EV sector. So we have to kind of do it this way where we look at all the names, not looking very hot. Flip that over to blockchain names. I just nicknamed it crypto. Those are doing good this morning. I mean, there's always going to be something a little off, but we're looking at a 12%, 4.5%, 3.25%. Those are decent sized moves this morning. Even Riot still kind of shaking a leg this morning. Nice consolidation. Look at these higher lows, equal highs. The very picture of compression, right? Riot's getting ready to make a move. Love it. So crypto, EV. Let's see if there's another one in here worth kind of picking on. Yes, the pot stocks are all doing good this morning. Look at that. Every single one of them. So we would want to, maybe circle around, catch a red to green if we can. Looks like InBev may be coming out of that failed flag pattern. Very beautiful. If we get above the 50, it's a run to the 2. The 200 moving average is that purple moving average there. I like it. This might be a play today, tomorrow. When we're looking at these two watch lists, this is weekly options 1, weekly options 2. I had to make 2 lists because TrendSpider won't let me make one list of over 600 names. When I have to scroll a long ways just to get to a 0.5%, it shows that there are a lot of names up more than a 0.5%, right? Because I got to sit here and scroll and scroll and scroll and scroll and scroll. It's very bullish. Looking at some of the names on that list, if there are a lot of IPO names, it kind of fits in with that whole, bullish sentiment, emerging markets kind of thing. So it's worth taking a look at how many names in that have weekly options are up in the morning. It's a great way to find things worth trading. They don't fit into the sectors, right? I know we went through the sectors, but this is a completely different way of approaching things. Those sectors that we look at are based on ETFs. Those ETFs are developed by weight, right? So you take something like Amazon and you make an ETF that has Amazon in it. Amazon's a monster. They would have to very, very carefully add Amazon in a very small amount, or it would outweigh the entire ETF. Well, when we're not using ETFs and we're just instead straight up looking at names, there's no weight to push them around. Got an idea. I don't know if it'll cripple my Thinkorswim or not, but it's worth a try. I've got a pre-market change percent that I built for Thinkorswim. It's still under testing mode, so I haven't shared it with anybody. But if we're looking at weekly options or companies that have weekly options, we can build that right inside the Thinkorswim. One list. Now, this is a shortened list. It's looking at things with an average volume, so it didn't give us an error. But if we were literally just to bring up things that have weekly options, do you see how I brought that up, by the way? Click here where you get the list, scroll down, they're alphabetized. You want, quote, weeklies, that's a W. So you go to public, weeklies, there's everything that has weekly options. It's not filtered. I like to filter it. I like to take out ETFs. You could just use the scanner for that. But hey, my indicator didn't break. Yay. Now, yeah, see, custom expressions exceeded. So we ran out. That's too many names. But if we were to weed it down to where, say we get rid of ETFs and we get rid of things that have earnings today or something like that, something to make the list a little bit smaller to where it doesn't break, then we could use that change pre-market percent, and we could look at these names by their sector, sorted by their change in pre-market percent. That would be pretty good to do. Unfortunately, custom expressions exceeded. You can't push Thinkorswim that hard or you break it. That's what I got for you guys. Have a great day. I will see all of you tomorrow.